You are wondering how today's global stock market plunge will impact your money. In tonight's Dollars and Cents, I'm getting you answers. The Dow plunged more than 1,000 points at one point today, and some of the world's biggest tech stocks are also tumbling. All this fueling fresh fears the U.S. could fall into a recession. Right from the opening bell, stocks plunging, the Dow down 1,000 at the start. The S&P 500 also falling sharply, and signs of a slowing U.S. economy is sending a signal across the world. The sell-off starting in Asia. Japan's Nikkei plunging 12%, its worst day since the Black Monday crash in 1987. Investors reacting to Friday's stock declines here, and news the U.S. unemployment rate hit 4.3%.
That is historically low joblessness, but it does show that joblessness has increased more than 0.5% since January, when unemployment was 3.7%, something that doesn't usually happen when the economy is healthy. A rise like that is historically a sign that a recession is imminent.
Many tech stocks leading the downturn today, mainly companies relying on artificial intelligence trade like Alphabet, Amazon, Meta, Microsoft, and Tesla.
A lot of these companies, the Magnificent Seven and companies beyond that, they're spending a lot of money on artificial intelligence, but the payoff is a little bit further down the road. So I think there's a broad array of companies that are eventually going to make money in artificial intelligence, but for right now, it's very narrow.
Economic experts say all this signals an interest rate cut coming from the Federal Reserve to fend off a recession.
So it's good news if you are carrying a large amount of credit card debt. And in fact, people are taking on more credit card debt. The average household has more than $7,000. If you go back to 2021, when the APR on average was 15%, that would cost you $90 in interest. Today, at today's rates, it's $126.
A cut in interest rates would also help those looking to get a mortgage or car loan. The Fed is set to meet again next month. I talked with local experts to get a clearer idea of what you can do with your money now and how to protect your investments. They say if you have a 401k, the answer depends on how close you are to retirement. Professor Derek Stimmel at UC Davis says while the market has been down, it is generally still up for the year, adding, quote, for those close to retirement, this would be a good time to assess whether they should remain in the market or to what extent, and see if they need a lower risk portfolio. Keep in mind, experts say market declines like what we saw today happen all the time. Joseph Eshelman, the president of Tower Point Wealth in Sacramento, says the last thing that should be done is to hit the panic button or make short-term decisions that affect a longer-term investment plan. He adds that interest rates have declined significantly in the past week and a half and, quote, if you recently took out a mortgage over the past 3 to 6 months, there could be a potential opportunity to refinance. CD rates and interest rates on savings accounts have also declined. To see more of my Dollars and Cents coverage, scan the QR code on your screen or head to our website, abc10.com.